Hey everybody, it's Reed Limpert with Tax Reduction Concierge, joined today by our in-house Tier 3 tax planning specialist, Mark Myers. Mark, thanks so much for joining us. Mark's got a summary of some Tier 3 tax strategies that are available for your consumption here at the end of 2024. Mark, why don't you dive right in and show us what you got?
Reed, thanks for having me. This is going to be a fun conversation. Let's jump right in. Really,
Yeah.
we're going to talk today about tax efficiencies that you're probably not going to receive any information on from your CPA, but that's okay because we work strategically with them. And let's just talk about a tax savings review. So what we're going to do is we're going to go over an example case study. And we're going to look at a $2 million income earner in California. But before we do that, let's just quickly go over kind of the concepts here. When you look at tax savings efficiencies, a lot of people are doing the tier 1 deferral into qualified planning or a tier 2 efficiency. Hey, what can you purchase to get a deduction? Well, we don't want to focus on those. We want to focus on tier 3. This is the pinnacle of tax savings. This is finding ways to move money from your business in more tax efficient ways so it's not taxable when it hits your 1040, or maybe giving you deductions that have leverage, or the creme de la creme here is getting tax credits. When you can get tax credits and you can carry them back and carry them forward, and you can get them at a discount to their face value, then you're getting a really phenomenal tax efficiency. So we're going to focus intently on tier 3 strategies today, Reed. And of course, we look forward to answering any questions you may have when you see these. So just reach out to us when you desire to learn more. So let's just look at tax savings review. So we're going to look at an adjusted gross income, again, $2 million. This is a California client in the highest tax bracket. And we're going to look at net gain because we always say, economics, if it doesn't make dollars, it doesn't make sense. So we want to show you the dollars initially. So there's 3 different ways you could go about tax planning with a $2 million income earner. And by the way, these can be W-2 earners. They do not have to be business owners. So we can help W-2 earners. We can help business owners. It does not matter. So it's really important to know that because a lot of people think that as a W-2 earner, you don't have a lot of options, and you absolutely do. So option number 1, net gain would be $140,000. Option number 2, net gain would be $306,000. Most people are starting to like these sequential options because option 3 is $412,000. So what net gain would you like to have? 139,623, 305,580, or 412,055? So let's go through the details of how these work. First thing we're going to do is just kind of give you a real basic overview of how we're acquiring these benefits. Solar is a phenomenal resource, and our House and Senate, our Congress, our federal government loves renewable energy, and they love it so much that they want to give you a big tax credit for installing it and expanding the new renewable energy grid in America. They also have a really tight depreciation schedule, these panels. So between your depreciation schedule, your tax credit, and the fact that you can pick up positive cash flow from solar, this is a phenomenal way to reduce tax. Another thing we're going to talk about today is actually acquiring an asset. And when you acquire an asset and you subsequently donate that asset, there's an opportunity for arbitrage, particularly if you can acquire the asset at a discount to its current fair market value. This is a really powerful strategy that's been around for 120 years. We're just making this accessible to you in a turnkey manner. And there's plenty of other coupons that we can talk about, but of course today we're going to talk about the main heavy hitters, which is the asset acquisition with subsequent donation and also starting a turnkey solar business. So let's get into the numbers. Let's look at strategy number 1, where you're picking up a net gain of 139,623. How are we going to accomplish this? Well, the first thing we're going to do is we're going to focus only on 2024 tax savings. We're not going to go and look at prior year refunds, which we can, which will be very interesting when we talk about integrating solar into your planning. So first thing we're going to do is we're going to reduce your taxes. So a $2 million income earner in the lovely state of California, when you add the sunshine tax on top of the federal, it's an $887,000 tax bill. That doesn't include the employment tax on the first $170,000 worth of W-2. But we can address the federal and state. So what we're going to do is we're going to help you reduce that to $597,561. Unfortunately, the federal government doesn't just give you a coupon and say, hey, we'll just let you pay $597 this year instead of $887. You actually have to buy the coupon. So let's talk about what that looks like. Your first year tax savings of $289,623, that's how we get from $887 to $597. Well, you're purchasing that discount for $150,000. So your financial benefit is actually $289,623. There's your $139,623 net gain. That's a 16% coupon on your tax bill. So we always like to talk about tax savings and coupons. When you look at and utilize certain tax code, well, the efficiency that, or the outcome of that is a tax savings. So we like to cut coupons for you. This is a nice coupon that literally you purchase an asset and within the same year you subsequently donate that asset. We have a turnkey way for you to do this. And the charitable organization is very thankful that you gave it to them and you get to take the fair market value deduction, which gives you arbitrage. So you'll notice on these asterisks here, some of the solutions we have actually provide 6 years of benefit. That will be when we start getting into the solar conversation. So now let's talk about option 2. This is actually the detailed benefit schedule for option 1. And just so you know, we talked about before, this is a 1-year benefit. As you can see, year 2, 3, 4, 5, and 6, no benefits, but of course you can do this year over year. So essentially, if you had $2 million of income every year and you wanted to purchase a $150,000 asset that is worth $289, then you're going to duplicate this and get $139,623 every year. But what we're going to do is now go into option 2, implement your solar business, which is turnkey, by the way. It's very efficient. You're not going to spend much time on this business, and you do not have to be a solar expert on this as well. So let's go into option 2. Now we're looking at a much larger gain. Instead of $139 net gain, we're looking at $305,580. We're looking at a 2024 maximum tax savings, and we're also not going to look at prior year refunds just yet, but we will jump into those soon. So how do we accomplish this? Well, we take your $887,000 tax bill, and we reduce it to $255,000. And again, you have to purchase these benefits. So let's talk about what that looks like. The first year tax savings, as you can see, $887 minus $255 is $632. You're going to purchase those benefits for $481. So you're going to have a first year arbitrage, and then you're going to have a financial benefit totally of $786,548. So your net gain is $305,580, which is a 34% coupon. So let's talk about how that works over a 6-year period, because you're actually going to get $686,000 of benefit, but it will come to you over a 6-year period. Most of that benefit is going to be carry forward depreciation, but you are going to get a lot of tax credit from your solar purchase. So let's move forward and talk about how that benefit comes to you. So in year 1, you're purchasing a $632,000 benefit for $481,000. Your net gain is $151,443. Again, because you're purchasing 6 years of benefit, you can see 0, 0, 0, 0, 0. Of course, we would recommend that you purchase solar again the next year, and the 3rd year, and the 4th year, and you'd have compounding depreciation benefits, because these numbers here are benefits from carry forward depreciation and cash flow. So in the first year, between your depreciation that you can use, your tax credit that you get for your solar purchase, your itemized deduction from your charitable donation, you're going to have a $632,000 benefit for only a $481 cost. There's your $151 net. And now moving forward, because you're going to hold this solar asset for a 6-year period, and that is the optimal time, because at the end of 6 years, your tax benefits are over. You're going to pick up 51, 31, 19, 19, 3, 6. So you can see how you're getting this cumulative gain. 151 plus 51,092 equals 202. 202 plus 31,394 equals 233. Work your way up the net gain here, and at the end of 6 years, when you've maximized and exhausted the depreciation schedule for the solar, you're at $306,000. Let's talk a little bit more about option 3. Option 3 says, hey, let's go back and get a refund, because the Inflation Reduction Act for solar says if you purchase more solar than you need this year, you'll get excess tax credit. The excess tax credit can carry forward up to 22 years, or it can carry backwards up to 3 years. Very interesting to get refunds from previous years, particularly with time value of money. So let's talk about what that looks like, because in this situation, someone may have paid a lot of tax in previous years and they're interested in getting it back. And you can see that this can create more net gain for you. So this would be a prior tax year refund, even though here we're saying no prior tax refund. This does include a prior year tax refund, just for clarification purposes. So your 887 tax bill is going to be lowered to 237. You're only getting the 650 your first year tax savings, and you're paying 690 for it. So a lot of people are saying, wow, I don't know if I like this net negative arbitrage in the first year. But when you know that you're actually purchasing $1.1 million of benefit for $691,000, it becomes a little bit more appetizing. This is a 46% coupon when you're netting 412 on an 887 185 tax bill. Well, you're basically slicing your tax bill almost in half, and that is your net gain after all your expenses. But remember, this $1,102,591 benefit comes to you over a 6-year period, which is a cumulative effect of depreciation, tax credit, deductions from your donation, and also the cash flow that the solar is going to produce. So let's walk through that. I know I'm flying through this, but we'll go into much more detail when we talk to you in person. $695.36 is the expense in the first year, which will produce a $650 savings in the first year. That's a negative $40,000 gain. But because we're going to have a significant amount of excess tax credit, and you can carry that tax credit back to 2021 or whatever year you're purchasing this is 3 years in arrears. Well, now think about this. You're trading $40,000 in change for $284,000 in the following year. Why? Because you're going to get your tax refund when you file your tax returns the following year. You're purchasing the tax credit in year 1. You can take advantage of the refund for previous years in year 2. So think about this as a 12-month period of time, give or take, where you're going to spend about $41,000 more than your tax bill. It's going to turn into $284,000, mostly of refund money from previous years. That's a 600% return on your money, net of tax. So I always like to ask people, where do you have $41,000 that's earning 600% net of tax in 1 year? And if you don't have that type of return, then you might want to take it out from where it is, spend a little bit of extra money this year to get the refund so you can grab the significant return. And you're really getting 1,000% return because remember, you are getting the 6 years of carry forward depreciation, and you're also getting the positive cash flow net of tax. So how do you turn a $650,000 or $690,000 expense into we'll go back here, a $1.1 million benefit over a 6-year period of time? You purchase an asset, you subsequently donate it. We can turnkey that for you. We help you turnkey a solar business, which you would likely purchase solar assets year over year over year, which produce tax credits, depreciation, and positive cash flow. At the end of year 6, you can continue to hold these solar projects because they will produce cash flow for up to 35 years. A lot of our clients do take the option that we provide, which is you can donate these assets to a charitable organization. You can walk away from them after exhausting the tax benefit, and you are picking up an additional deduction for your itemized charitable gift. So I flew through that really quickly. We look forward to actually speaking to you in person to really go through the nuances and logistics. Reed, hopefully that was helpful. And again, if you have any questions for me or you want to go through this a little bit further, let me know. But again, just wanted to be as time efficient as possible in going through these slides.
That was great. And we definitely look forward to working with anybody who'd love to learn more and get a customized projection for themselves. Please reach out to us directly. All of our contact information will follow at the end of this video. Thank you so much for everybody's time.